Arvind, I want to begin first by congratulating you. Next month, you turn 5 years old. And from an outside perspective, River is a company that has done things very differently. You have started in the game very late.
Yep.
2021 is when you were formed. For the longest time, nobody knew who you were, and you didn't make any noise about who you were. Your scooter came out in 23, and you got that scooter to people quite quickly, unlike a lot of startups that take a year or more. You have scaled up quite astonishingly well in the last year. You are now number 7 in the industry, 2,500 units according to Vahan last month, maybe more with Telangana. So, congratulations on that. Please tell us how the last 5 years have been and how you have pulled this off.
First of all, thanks, Rishaad. Thanks for coming. I think it is the last 5 years have been phenomenal. I think there is merit in working behind closed doors without making too much noise, because we have always resorted to the fundamentals, and fundamentals make or break a business. So at the end of the day, our thought process has always been that we'll focus on what really matters and subtract the noise away from the what really matters and only execute that, because if you have less to do, you do them better. And that's very evident in everything we do. Like, for example, we have one model, and we are possibly the only two-wheeler manufacturer with no variants.
Right.
So when a customer walks into a River store, the one decision that he or she has to make is which color to pick once they have decided to buy the Indi.
Right.
But behind this, it also makes the entire operations way smoother. Like, we are a small manufacturer. We make what, 3,000, 4,000 units a month right now. We manufacture. It makes our supply chain simpler. It makes the manufacturing simpler. It makes the dealership simpler, servicing simpler, and there is merit to that.
Right.
Yeah.
Okay. So, it's been this journey so far for you. And from my experience of covering the auto industry, I've realized it feels like, especially for the startups, creating the product is only the first hurdle. And perhaps the even bigger challenge is being able to scale up your production. Is that accurate?
Oh, absolutely. See, creating a product, and these are very different sides of the company, because if you look at River, we have 4 independent organizations. There is the R&D organization, which is responsible for creating the product. Then there is the manufacturing organization, which is responsible for taking the product into mass production. Then you have the commercial organization, that is sales, service, marketing and all that, and we have a support function. Now, all of them have to work together in tandem for us to scale, but precisely scaling the manufacturing itself is a entirely different ball game.
Right.
Like, not long before, we were making 20, 30 scooters a day. When we were selling last January, we sold 600 bikes. This January, we sold close to 3,000 bikes. So going from 20, 30 a day to making 200 scooters a day has been extremely challenging, because your supply chain needs to get wired for that. Your entire logistics needs to get wired for that. Your factory needs to get wired for that, and it has not been easy. Simple examples, like when we were, take frame for that matter, we were hand welding frames when we were making 20,
In-house?
30 bikes. No, but the supplier.
Okay.
And there were quality problems that were coming, because hand welding has got accuracy problems. But now we have an entire robotic line that is turning out 200 frames in 8 hours time. And that took us almost 3 to 4 months to, no, it took us 6 months to design and put that line, and another 3 months to prove it.
Right.
So that's just 7, 8 months right there. So, and everything takes time, and it's a cycle that needs to kick in.
Right.
200 frames needs to come into your factory. We need to make them into 200 vehicles. They have to go to dealerships, and then we also have to strengthen the muscle of the servicing all these 200 vehicles, because today we have around 25,000 scooters on roads, and Bangalore has more than 6,000 scooters. We open around 1,500 job cards every month in Bangalore. So it's not only about making them, it's about strengthening the entire muscle around distribution, serviceability. Otherwise, the system breaks.
So tell me about distribution, because again, I see that being a challenge as a new player trying to figure out where you go, how do you pick a partner, how do you make it lucrative to have a dealership in the EV space? Are you guys doing something different there?
We're just doing the basics there. So we have a few golden rules. So we made a few golden rules which are extremely simple. Like, number 1, we do not sell in a city without a service center. So a dealer has to invest in both a store and a service center. Number two, all our service centers are bare minimum 2,500 square feet in area with minimum 3 bays, because we are investing for scale and the dealer will always possibly not want to invest again in a very short duration of time. But the stores are only around 800, 900 square feet, and stores are typically on high street. Service centers are inside. So, service center, rule number two, service centers are at least 2.5, 3 times the size of a store. Rule number three is that we want every store to be profitable. Because if a dealer is not profitable, then that puts us into a vicious cycle. A dealership is not profitable, then they are draining cash and the dealer loses the interest in the dealership. They stop spending time into the business, which will affect the service, and that vicious cycle is extremely difficult to come out of. There are many automotive brands who are caught in this. So we decided to do less but do it well.
Okay.
So fundamentally, the first step that we took is we made sure the business case is reasonable. Like the entire investment for our reverse store and service center today is around 60-70 lakhs. And the dealers break even operationally if they sell 30-35 scooters. And they break even the entire capex in around 18 months if they sell 60-70 scooters a month. Okay, so the goal is very simple. Every store needs to sell minimum 50-70 scooters depending on the market and city. First step. So if there is no potential to sell 50-70, we don't open there.
Right.
As simple as that.
Right.
And India has more than 100 cities where 500 electric scooters are sold. We have covered only 33 of the 100.
Right.
So that's also your first question. Where are you going to open?
Yes.
And each of these 100 cities have real automotive clusters which are already well defined. Then the challenge is to find the right outlet in the right real estate in that cluster.
Yeah.
That's it. So today when we operate 46 stores, we have only 20 partners. So each partner is reinvesting in more stores, and that's the only way to sustain.
It's a good sign, yeah.
Absolutely. That's the only way to sustain.
So what's the goal for dealerships, let's say, by the end of 2026?
By the end of March 2026, we'll have 80.
Oh, that's doubling it almost in
Yeah,
a short period.
Yeah, I see. It's actually a lot of work which went behind, because we started selling in October 23.
Yeah.
As you said, we didn't have a single store or service center when we started selling. The first store came out in Jan 24. That was extremely expensive. That is when we realized, oh my God, no one's going to invest in a dealership which is more than 1 crore. Then we did a lot of value engineering, got the design right, and got the investment down. It took us almost 6 to 8 months. Those 6 to 8 months we only sold in 3 cities, which is Chennai, Bangalore, Hyderabad.
Right.
So entire 2024 we sold only 3,000 odd vehicles. Then November 24 we got the Gen 2 out. Then we also got the formats ready for the store and service centers. And after that, since then we were opening on an average 3 per month.
Okay.
Which is a bite size that we could manage, making sure that the service is proper, the stores are profitable, etc.
Yeah.
So that added roughly around 30 to 40 stores. Today we have 45. Now we have come to a point where we can add 7 to 8 stores a month. That's the jump you're seeing.
Yeah.
So there is already work happening.
So 80 by the end of March.
Yeah.
And by the end of the year, 100, 120?
Close to 150 is
by the end of the financial, the calendar year or the financial year.
Financial year will be, we want to make it closer to 180 to 200.
What are the production plans to match this expansion of dealership?
Our current factory already has a production capacity of 1 lakh scooters a year.
Okay.
That translates to 8,000 scooters, 8,000, 8,500 scooters a month.
Okay.
Today we are, that is in 2 shifts.
Right.
Today we are utilizing 50% of the capacity. We are producing 4,000 scooters a month. That's 1 shift operation. In April, we'll start the 2nd shift. Once the 80 stores are open, we'll start the 2nd shift. And by end of the year, we want to target to get to the peak capacity of the current factory. So and that is 8,000. To evacuate 8,000 scooters, we anticipate that if every store has to be profitable, even if you consider a store average of 45-50, we need around 160 to 180 stores.
So it sounds like you're already working on a second plant.
Yeah, I mean, we really would need a second plant by next year.
Okay.
So we haven't started the work yet, but the plan is on.
And it will be in this region itself?
See, we are good at running boutique operations and we want absolute control.
Right.
Even the current river factory is only 45 minutes away from the river HQ.
Right.
Which has given us tremendous advantage in collaboration. R&D team is at the factory. The minute something goes wrong or any assembly sequences, the factory team and the R&D team collaborates really well. So we don't want to lose that agility and the advantage of a smaller setup. Also, I don't think we know how to run a factory which is remote. As an organization, we need to learn it. So maybe the next step is to put a slightly larger factory where we can reach maybe 20,000-30,000 units a month. Up until that, we want to keep the factory close by.
Okay. And you've got, I think, a very good supplier base here as well, with Hosur on one end and the Honda plant not so far away, the Narsapura plant as well. Yeah.
We are right in the middle of Narsapura and Hosur.
Okay.
So we get the best of both worlds.
Fantastic.
So the frame, our frame is manufactured by the same manufacturer who makes frames for Honda. Right? We get the plastic part from the same manufacturer who makes the plastic parts for TVS. So we are able to mix and match quite well. It was a good decision to start the factory in Hoskote.
So the fact that you have a high quality supplier base is a confidence boost for your customers, but there's another confidence boost that happened last year in the Yamaha investment. That's a really interesting story.
Yeah. See, I think the industry has gone through collaboration.
Right.
Automotive industry globally has gone through collaboration, right? Grown through collaboration. And Yamaha invested a year before last. 2024 is when the investment happened. And then we started talking about the collaboration after. So it has been a beautiful win-win journey for both of us, where we are, I call it coming of age by fire in terms of manufacturing and quality, because we had to pass through Yamaha quality norms before we are able to send the LVT.
And I can't imagine that's easy.
Yeah, that's possibly a boost of confidence for the team also, because we collaborated really well with the teams in Japan and India. We are able to work extremely effectively in order to achieve the quality standard, which is also elevated reverse quality standards and manufacturing prowess.
Awesome. So far you have made 2 scooters. You have made your own, the Indy, which has evolved a couple of times. There's been the Gen 2 and the Gen 3.
Yes.
Which the Gen 2 and Gen 3 were basically improvements that you discovered along the way that needed to be made.
Yeah.
You've also made the EC06 for Yamaha. At what point do you need a second product in your portfolio?
So if you go back to the fundamentals, the best case scenario for a product company is that the first product goes on to become a cash cow, the primary large product. That's the best case scenario for a company. Now that with 3 iterations in 3 generations, we have taken Indy to a comfortable position in terms of performance. There is a reasonable acceptance amongst the market, 25,000 scooters on the road, etc. So India has kind of unlocked the potential to go all the way to maybe a 10-15,000 units a month. And we want to give India that opportunity to grow, because only 33 cities in India has seen the Indy.
Yeah.
And we have another 67 cities where 500 EVs are sold every month, where we haven't even taken the Indy to, right? So that is the immediate next step. That's the first one perspective of looking at it. The second perspective is, first perspective is Indy needs to be given a fair chance to grow. Second perspective is adding a product is stress testing your entire operations, the entire operation machinery. It is stress testing your supply chain, it's stress testing your manufacturing, your distribution, your service, everything, because you're adding a layer of complexity. I strongly believe that for a company to unlock that level and be ready for the stress test, carry forward the learnings from the previous product to this, you need reasonable scale, maybe 8 to 10,000 units a month if you're selling one product. Maybe you can start thinking about the next product. Without doing that, possibly you're spreading yourself too thin, and we are a small scale operation, and we want to keep it that way. We want to be agile. So after 8 to 10,000 a month for the Indy, which is possibly a year from now, we're already thinking about.
It looks like 2026 will be the year of the Indy and scaling up.
Correct.
Okay.
If India reaches 10,000, that's already in a good place, right? We have established products from established OEMs that are selling 8-10,000 units a month, and it's a profit making product. So that is when we believe we'll be able to carry forward all the learning. We have given India enough time, and there is an alternate that we can bring out for the consumers. So
we already have a couple of our EV startups that are exporting.
Yeah,
India. Is that something that you see value in at the present moment, or when do you think you should start exporting?
That's again a few levels away for me, because see, India is the largest power two-wheeler market in the world. We are growing quite fast. So the entire Thailand market is around 1.8 million two-wheelers. Karnataka market alone is 1.9 million two-wheelers. So if I went,
That's a good one.
if I want to sell an extra 100-200 vehicles, then the easiest option is to go and open 4 stores
Right.
in India.
Right.
So again, it's extra complication, extra layers of complication on your operations. You need to get homologation done for different geographies. You need to have a team there. You need to do marketing in different geographies. A lot of management bandwidth will go in identifying distributors in different geographies, because it's not the same. Even when we sell in India, we see that selling in Karnataka is very different from selling in Delhi. We haven't figured that out yet, leave alone trying to sell in, in a different country. So that possibly will unlock for us after we reach maybe 20,000-25,000 units a month, because there is enough work to do in India, and we need to be able to establish as a strong brand in India before we start thinking about exports.
Okay.
So Indian subcontinent may be a easy win, may or may not, but anywhere outside, I don't believe the effort that we put into an export will, and the incremental benefit that we are able to get, it is justified at the current scale that we have. We would rather focus on a market that is close to us and scale.
It's a very sensible approach.
Yeah, I mean, very practical approach. And whenever there are two paths, we always tend to take the simpler, easier path.
Right. Let me ask you something else. IPOs are the rage everywhere these days. Everyone loves talking about IPOs, even if they haven't sold much.
Yeah.
You haven't mentioned anything about this. Is it on the back of your mind? Is it a near-term prospect?
See, the only intention for the founders of River and the key management and the investors of River is to scale River. So today we are number 7 EV brand in the country. We want to keep growing. We want to keep scaling. So we have a plan laid out. Up until March 20th, we spoke about it, right? I need to be able to increase distribution, maybe add one product, increase manufacturing, and this is a lot of work. So there is no end state that we see in an IPO. So IPO may happen, may not happen. These are ways of raising capital, and we have been able to raise capital in private markets. Now we have good investor base who's been excited about the company's momentum, the company's growth. So again, we are not compelled to do an IPO at this current stage. That's point number 1. Point number 2, you need a minimum scale to get an IPO done. We don't have that scale today. This year possibly we'll cross 420 crores in revenue. Last year was 100. So we did a 4x growth this year. But I don't believe that without getting into a 1,500, 2,000 crore revenue, this is around the same time when Ather also got listed, right? It is prudent to talk about a public listing, because public markets may not even take a look.
Right.
Yeah, and this is a large scale industry, right? It's not a small scale industry. So not too sure of how practical it is to get an IPO done sooner than that. That is second. So we don't have the scale to talk about it. So I'll rather start talking about it when I have a scale, right? So that, yeah.
But I had to ask because everyone just talks about it these days. So
Yeah. I mean, they might have their own strategy, but I am very clearly practical about it. I don't have scale about it. Rather not talk and spend time about it. I'll work on my business and get to that scale.
yeah. Awesome. I want to touch back on what the potential second product could be, or what a Gen 4 ND could be. Now, my understanding of River, and you've explained this as well, is that you are a design-led company that also really values practicality and utility.
Yep.
Is that the ethos for whatever you come up with? Will they all always be a 14-inch wheel sort of scooter and things like that, or would it be a very different direction for your second product?
We will not make the fastest scooter or a performance scooter and all that. So I think the ethos that you mentioned right now, which is the utility lifestyle, as we call it, is the single biggest filter that we have on what not to do. And we take pride in subtracting things to do rather than adding more things to do. So we are a company which is very good at subtraction. So it's easy for us to subtract. Is it in the utility lifestyle spectrum? If not, we won't do it.
Right.
As simple as that. So River is a brand which is very focused on utility and livelihood. And we are targeting solo entrepreneurs who depend on their two-wheelers for carrying things for work. Our entire mission is to make their day better by helping them do extra with every ride.
Right.
So we strongly believe that if you are able to enhance every ride, you make their day better, which will in turn enhance their life and livelihood.
Okay.
And India has a large growing population of young educated entrepreneurs who are coming into trade. And we have this beautiful marriage of utility and lifestyle, and very well articulated in SUV or scooters, and that's what our customers like. We won't do anything outside that.
So you've established yourself as premium. Your product is on the premium end of this segment.
Yeah.
Does the second product come in at a lower level, or do you go even higher up?
We haven't decided that, but my thoughts around that are it's very easy to come down. It's close to impossible to go up.
Okay.
And this is an industry where profitability is difficult, because most players in the industry, I don't think there is any player in the industry who is already profitable yet, in spite of building good scale. So when an IC engine product is making around 40-45% gross margin, and EV will end up making 25-30% gross margin at the current scale that we are talking about. So at 25% gross margin, how do you become profitable? Is the question. Now, when profitability is constrained, may not be a prudent decision to come reduce the price because customers have kind of established that, okay, it's comfortable to get 1.5 lakh rupees. Right. That is one. Second is a brand perception in itself. We are today a brand where customers are walking in and comfortably paying 1.4, 1.5 lakhs for the vehicle. It's easy to make it 1.2. We will never be able to take it back to 1.5.
Yeah. Okay. Final question, bit more of a broad topic. You are trying to make utility cool and meet people's utility needs in an aspirational way. Utility doesn't have to just be two-wheelers. Yeah. Can you see a way that a three-wheeler or a quadricycle or something fits into the river ethos in the future?
Not in the next 3 to 5 years.
Okay.
We have enough work cut out in two-wheelers.
Right.
See, we barely touch the surface right now, right? I mean, so...
no, I don't mean to say in the near future. I mean, is this something that river could see itself getting...
I mean, it's too premature to talk about it, Rishaad. We haven't actually thought about it, because will we make a quadricycle or a four-wheeler, etc.? Are decisions that... no, we haven't really thought about it. We have thought about the next product.
Right.
Maybe the product after that. All are two-wheelers.
Right.
Yeah. But what happens 4 years down the line, not really sure. Also, the market might move in a different direction.
Right.
So it'll be very irresponsible of me to sit and plan for 5 years down the line without knowing where the market is moving. So we have reasonable plans for the next 3 years.
Okay.
Yeah. And that's what we'll focus on.
Awesome. I think we can end on that. I have to say that you have your company and you have a rare sense of clarity and knowing exactly what you want to do and what you don't want to do. Very refreshing to see. Thank you so much.
Thank you, Rishaad.
Wonderful to talk to you guys.
Thank you.
Thank you so much.